death of a file is with car loans.
Right.
For every $450 that you have per month in payment, it takes away $100,000 of your purchasing power.
Welcome to another episode of Here We Grow. Today I got Manu Delaney, who I'm very excited to have on. I actually think you are the first non-realtor, so welcome.
Thank you. I'm super excited to be here.
So Manu is in the mortgage industry, and I'll let you kind of do your own intro, but I wanted to give you props because you don't mess around, obviously. And I actually had a personal experience with you where you were dealing with my mortgage. Kind of weirdly enough, my guy stepped out of the picture, and because fishing is more important than mortgages, apparently.
Hey.
And I'm sure he'll watch this, so I'm going to hear it about that. But you took care of business for me, and then I've had some experiences with you with mutual clients and stuff like that, and you've done a very good job. So there's no lack of work ethic, which ties into this podcast, which the whole mentality is here we grow. It's a saying that we say around here. Which basically just means and what I want for this podcast is anybody who is super motivated to get better in any really industry, whether it's financial success, anything. And that's something that obviously you do. I know that you've been a very competitive athlete growing up because obviously we go way back, but talk about your background. I mean, I know you mentioned the other day, you got some pretty serious statistics being 99% funded, which is huge. Talk about your background story, talk about how you got into the mortgage industry and, who is Manu?
Yeah. So, I mean, like you said, we go way back. Yep. I didn't think that I was going to fall into the financial industry. I went to school for kinesiology, so completely left field, right?
Yeah.
I came back to Kingston, home base, and I got into corporate banking. So I spent around 6 to 7 years in corporate banking, started from the bottom up as a teller, mostly customer service. And then I jumped into the mortgage sector, which is where I've kind of found my affinity for lending, piqued my interest, went into financial advising for a solid 2 years. And then just last year, I went into brokering. Like I said, when I was a financial advisor, something that really spoke to me was lending and actually the educational piece behind underwriting deals and working with those clients. There's a lot to learn when it comes to lending, the ins and outs, the nuances. And I wanted to be able to run a business or present myself in a way that I can educate people on that. It was really that passion that drove me to take a step out from corporate banking and go more so on the private brokering side. It's allowed me to give my clients a lot more options. It's opened my eyes to the brokerage side. And it's definitely where home is for me.
So that must have been a pretty big leap of faith, though, going from obviously a major bank to and how does that work? What's your brokerage called or that you're with now? Right.
So I started out with Dominion Lending, and then I decided to go into more of an independent brokerage, Key Rate Mortgages.
Okay.
They're stationed out of Ottawa and Toronto mainly. Those are where our home bases are. We're all over Ontario. We're still fairly small. There's still less than 100 brokers, but we've expanded all the way out to BC. So we're growing. Yeah. And the opportunity, the team that we have is
You're
very,
here we growing.
Yeah.
Right?
Exactly. The team that we have is phenomenal. A lot of us actually come from a corporate banking background. So we have a lot of the industry knowledge and just bouncing off ideas through professional to professional, different experiences. The notion that, we are doing what we do specifically because we want to help our clients as most as we can. Honestly, yes, it was a leap of faith, but it felt right from the beginning. The minute I stepped out.
You're betting on yourself, though, which I think is cool, right?
Yeah.
That's the biggest investment you can ever make is in yourself.
Yeah, 100%. But, fruit of the labor.
Yeah, absolutely.
Comes true,
So let's go right to the $1 million question.
Okay.
What is going to happen with the rise of these mortgage rates?
Right. So it's good that you're asking me now, and I've been kind of, obviously, for what I do, it's really important to follow those mortgage trends and the rates and the economy and whatnot. It's it comes down to a big picture. It's not just rates. The reason why the rates are going up is because, well, we need a correction.
Yep.
Whether it's inflation in the market rates for, buyers' affordability in general, but also on the economic side, that inflation rate is it's climbing quickly. So from the literature that's coming out more recently, yes, interest rates are on the rise. Inevitable. It's been talked about for almost a year now, right? They were talking about interest rates hiking last year.
Yeah, and then they didn't.
And then they didn't.
Which is and here's my opinion, because that's what we're here to do.
Oh, absolutely.
They waited when they first announced that, it was a good idea.
Yeah. And
then they waited and waited and waited. So that prolonged this crazy growth that we had. We had a month this year. The month of, I think it was mid-January to mid-February, where the average sale price went up $100,000. So that kind of growth can't be sustained. And obviously, they just waited too long. In my opinion, I think they waited too long to do what they're doing now.
Right. So, and there's two tactics, right? At one point, they thought that inflation wasn't going to hit where it's hitting or prospecting to hit, right? So they were like, you know what? It's a big supply chain issue, which it is. A lot of it in terms of the inflation of the affordability in the market, it's the supply chain issue. We don't have any supply for the demand.
Yep.
But on the other hand, lending was cheap. But lending had to be cheap to sustain a good economy or some sort of healthy economy through what we were going through, right? Now that we are on the tail end of things, and now things are, going back to normal. We're going back to reality, which is higher interest rates. A couple months ago when they started raising interest rates, they were looking at just bringing them back to what they were pre-pandemic. Now they're tackling another problem, which is that inflation rate.
When does this stop?
So what's coming out, the verbiage that's coming out is they're what's called front loading. They're making it hurt right off the bat, and then they're going to coast throughout 2023.
Right.
There's been articles coming out that all of the big six banks, the investors and everything that are talking, of course, we don't really hear from the BOC until it's, the day of the adjustment.
Right.
They're calling for a front load increase. So these next months, we're going to see some steady increases to potentially an extra 2%, and that's what they're calling for. They're thinking that the prime overnight rate of the BOC will be towards the 2.5% to 3%. So prime rate at the banks could be close to the 5%, potentially 5.5%. Right. That affects your fixed rates. Usually fixed rates are higher than prime. Variable, obviously, depending on the lender, you'll probably get a discount. Right. So it all depends on what your ability is to mitigate your risks and what you're comfortable with. At the end of the day, it's temporary. They're looking to front load, make it hurt off the bat, so that in 6 to 12 months, even 18 months, they can start to, we're starting to see, again, the fruits of the labor, the hurt, that front load hurt is going to make an impact and bring things back down, right? So,
let's hope. I said this the other day. I was like, let's hope it does. And somebody's like, you don't mean that. I'm like, well, listen. If you bought your house 10 years ago, your house is worth $200,000+ more now.
Yeah.
So you should still relatively be happy, even if the market came down a little bit. It went up to a crazy amount. And somebody asked me when it started going crazy in the COVID kind of era, when are you going to be concerned about the prices? And I was like, I'll be concerned when the average sale price in our city, which is Kingston, Ontario, is around the $1 million price range. And we didn't get quite there, but there was a couple properties that sold this year that were not average, but pretty close. Big properties that maybe didn't have anything flashy, and you used to hear $1 million and be like, "Whoa, this is wild!"
Waterfront, East End, huge homes, and now it's something in the West End that has
It's crazy.
3,500 square foot of a lot.
Yeah, it's crazy.
You know, like times have changed. I remember when I started at the bank, that's what it was. Like even talking about something that was 550,000, you were looking at a ginormous house. Like, for example, the Tamarack homes in the East End, one of the biggest homes was going for 450, 500,000. Now they're going for shy of $1 million.
What I love is like back then, and I don't know if you get this in your industry too, I'm sure you do, but is like, wow, it'll never sell. It's not worth that. It's not worth that. Well, you know,
it's all relative.
Yeah, exactly. And it's, you know, the prices have come up too. And there's like, we've got endless stories of crazy stuff that's happened. So that's kind of transitioning to my next question for you. What kind of crazy, did you have to deal with any crazy stuff? Was there any crazy scenarios that you've been put in? Maybe not necessarily in the COVID era, but just in your career in general. Give us the craziest stuff. That's what we want to hear.
Jeez. I've gotten a few. A lot, I mean, in the financing world, it's a lot about, you know, people think that they can afford something and they're so absolutely disappointed and devastated when they can't, and they almost blame it on you that you can't get them improved.
Right.
And obviously it comes down to education, right? The financial education. It's more so people just don't know. Yeah. People don't know what actually goes into, you know, loaning or getting a mortgage. You're asking for basically a $500,000 loan. Of course, the banks are going to ask for your first and second born child. You know,
it's a lot of money.
It's a lot of money.
And the thing, so in our conversation the other day too, you were saying something along the lines of like, I can't believe how much you're asking. It wasn't this hard to get a mortgage last time. Yeah. Well, there's a reason that you guys are taking the precautions that you're taking because of, you know, 2008, obviously, and we don't want that to happen again. But it's a lot of money, right? And you said something else that I thought was really cool. You said, it's something that you earn. It might be something that you want, and it's definitely a need, but it's also something that you earn. And earn is a big word for me around here. I say it all the time. I believe in earning people's business. I think that everything in life you have to earn, you have to work for. You don't get something for nothing. Yeah. And that's a big thing that happens right now in our society is everybody thinks that, you know, we deserve it, right? Yeah. So there's a lot that needs to be done in order to get the financing, but you kind of have to earn it, right? Like
you got to put yourself in a good position, right? Yes, times are hard and affordable housing should be available for everyone. Housing should, to a certain extent, be available to everyone, right? Whether it's renting or owning. But owning a home is like, it's a huge milestone in your life. And I feel like over the last few years, it's like, again, you run into certain people and that haven't earned it or don't understand what it is to own a home. Yeah. It's renting is so much easier than owning a home. Yeah. 100%. There's less responsibility.
Can we edit that out for the realtors out here or like all my clients? Renting is not, you know, I'm just playing. Go ahead.
But there's less responsibility in the sense that, you know, usually the landlord takes care of the fixes. Yeah. You know, owning a home is huge.
100%.
It's great. Like once you own a home, it's fucking great.
Sell them, Manu. Sell them. Jesus.
It's great. It's great for building equity. It's great for building your credit. It's great for financial stability and
equity at the end of the day
healthy.
Is a big one. Yeah.
It's healthy for someone.
100%.
But it's a lot of work.
It is.
It's a lot of work. You have to have a good job. You have to be sound in your credit. You have to know how to mitigate your credit properly. You have to pay your bills on time. You have to keep your debts low.
So going into all that, because the other word that you keep using is education.
Yeah.
I think it's super crucial to be educated. I say the worst thing for a seller is an educated buyer. And that starts, the very beginning of that process starts with getting into a mortgage broker and talking to, getting a pre-approval, whatever. So we're going to talk about pre-approvals in a second. However, are there some key mistakes that you see people make that you wish they were educated on?
Big time. A lot of it has to do with carrying balances on credit cards, like your credit. If you have a lot of payments, it's going to be hard to qualify for a mortgage because it's all based on that income to debt ratio on a monthly basis. It doesn't matter what you make at the end of the year. It's what you can show on paper per month and what your payments are per month. So let's say someone seems, or they've mitigated their credit cards very well, but they have a student loan. Or they have a car loan, and car loans literally kill deals on a daily basis.
The death of a file you said to me the other day.
The death of a file is with car loans.
Right.
For every $450 that you have per month in payment, it takes away $100,000 of your purchasing power.
Holy shit.
$450. That's easy. You can get that in a car nowadays.
And the car will never pay you back.
No,
never.
It's a depreciate. You walk out the lot and it's $10,000 gone.
That's our clip for Instagram, by the way, Brent. Clip that out. That was good. So no, 100%. I couldn't agree more. And that's like, I had those conversations way too early when I was looking at buying a house. I was probably 2 years, because you need 2 years of sales, even though I had my down payment saved. And I sat down with a mortgage broker at the time who gave me a lot of advice that way. And it was the same thing. Like, keep driving your beat up old car, and you can worry about buying a nice car after you buy your home, but keep that debt low. And that's why, like, it is never too early to meet with a mortgage broker. Just like I think it's never too early to meet with a realtor. I think you should probably go see the mortgage broker first, because you need to know what you can spend. And I see people get their heart broken all the time. Yeah. But it's never too early, because just little tips like that people don't know or understand could save you like literally hundreds of thousands of dollars. Yeah. Because, like, for example, and it's funny you mentioned the car thing, because I had somebody I was showing houses to one time, who already had kind of like a limited budget, and we're showing houses, and then they show up with a brand new Chevy Silverado.
Oh no.
And I was like, oh no, exactly. Oh no. You're going to want to go back to your mortgage broker, because I think this is going to change your buying power. And it basically ruled them out for a couple of years. And that, escalation in the prices in Kingston, at least, would have costed them probably $100,000 to $200,000.
100%. And
for the $50,000
yeah,
trip.
and with rates nowadays, changing of the qualifying rate on a daily basis, because those fixed rates are just climbing and climbing and climbing. Like, your pre-approval can change on a dime. So you go out and get a new car, while be prepared for your situation to completely change and flip, and you're going to be disappointed, unfortunately.
So let's talk about pre-approvals, and the other thing that kind of goes. It's seeming to start going hand in hand with that right now, because prices are going so high and people are having to get more creative. Talk about pre-approvals, and then we kind of had this conversation the other day, but co-signers as well.
Yeah. So I'll jump in with co-signers right away, because it's more of that quick go. With co-signers, what I would suggest, it's great to have them. A lot of people try to avoid them.
Okay, let's dial back. What is a co-signer?
Okay, it's someone
Let's get it really basic.
Yeah. It's someone that goes on the deal and they get approved just as if they were a co-applicant. It's quite literally a co-application.
So I'm buying the property, but Pierre Nadeau, my father,
who's been in the business for 20-some years,
who wouldn't do this for me, for the record, Pierre said, go earn it yourself, I guess. But he could have signed for me or with me, I guess, right? Yeah. And then it's his credit that's getting...
Precisely. It's his income, his credit, but also his debts. So when you have a co-signer, it's really important to talk to your co-signer and be really open about their financial. If they're not, and this is where it kind of gets tricky on the broker side, if you have one person that doesn't know the financial situation of the other person they're asking to co-sign, it's difficult to maneuver between the two people and keep those two things separate. Right. It's really important to have a co-signer that you trust and that you're able to be completely open with on both sides about the financial situation. For example, you could have asked your dad, but what if he has 2 mortgages? Yeah. Those 2 mortgages come into play into your application. Yes, you're asking for more income, but it's not just the income. Right.
And it's going to affect him going to buy other properties moving forward as
100%.
Well, right? Yeah.
100%. So it's a big and heavy conversation that you need to have, but it's really important to have before you even start, because sometimes what happens is you go in firm because you have the money, you think you have the income, and you go see a broker and it's like, oh shit, this is tight. Yeah. Like, and then they go in 2 years later and ask for a refinance or purchase an investment property. growing a portfolio, those things limit you because they all come into play to every single application.
So so go into that, because that's been a big thing in this year, especially this year, last year as well, was having to go in firm, like you said, no conditions. So buying a property when you can't do an inspection, you can't go back to your mortgage broker and have a conversation to double, triple check that you have the money. You need to have everything. And this is why I have an original buyer presentation now that I do with my buyers before we even start looking at properties, because it's so important to know what the process looks like.
Yeah.
But I think that all comes down to, and what starts with, is that conversation with the mortgage broker, because this is talking from outside your industry, so I'd like you to elaborate too. But I think the pre-approval is super, super important because it's giving you an idea of what the payments are going to look like, what, you need to do in order to maybe potentially get pre-approved for more money. And for me, it's saving them getting their hearts broke, or even worse, like actually being in a legal situation where they've purchased a property and now can't afford it. How important is that pre-approval in your industry?
Oh, it's crucial. It's absolutely crucial. And you need to, my suggestion to anyone out there, whoever you're working with, your clients, have that three-way relationship between your clients, the mortgage broker, and the real estate agent. Have everybody on board from day one. Yep. So for me, my clients come to me, I find out who their real estate agent, if they weren't a referral, and CC every single email when it comes around to what the property is and what your pre-approvals are. Especially in this market with rising interest rates, that pre-approval can change, like I said, on a dime. Right. A lot of what's going on and what we're seeing is a lot of lenders don't have the capacity to actually do a full underwritten deal, excuse me.
Done that 9 times now on the podcast, so it's okay.
It's kind of underwriting a deal, which is quite literally gathering, as if it was a live deal. As if there was a property and you were putting in an offer and there was a solid offer, you would run the deal the exact same way for a pre-approval. What that does is it evaluates every aspect of the client's financial situation, including income, including debt. It gets someone else who's actually going to be approving the deal to look at the deal. Problem is, nowadays, the lenders and the banks just don't have the capacity. They ask for a minimum 10, 14 business days for a turnaround time on a deal. How can they do that for a pre-approval? Yeah. So the issue that I'm seeing on both sides is some people in the brokerage world just are new and don't know how to underwrite properly. Right. In the banking world, they just don't have the capacity because they have a million other things to do. So does your pre-approval stand? Well, you have to find someone that you trust, that is gathering all of the information. I gather everything as if it was a standard deal right up front. I don't care how long it takes, but I will not give anything an answer, a go-ahead, a green light, unless I have everything up front and I've done the whole underwriting process or qualification process. And that includes factoring in some property payments as well. Because the property at the end of the day has a huge play in a qualification. Yeah. Right? Property taxes and that square footage. It is so important to have that three-way conversation, because when you go out with your clients, especially if you're seeing 5 or 6 different properties and you're putting in 5 or 6 offers, those properties are going to look different, right? The longevity of the house, all these little things come into play with lenders nowadays. They want to mitigate the risk as much as possible. You need someone that knows the inside and out of the lenders, what's going on in the back end of things to get that green light. Firm is always going to be a risk that you take, but if you can do all the homework and do all the work up front, even if it's painful, you at least know that on the other side, once the deal actually goes through, you're way less liable, right?
And they can make an educated decision. Like, that's what I say about my job, is there's risk in everything that we do. Pricing your property to sell, when you go to make an offer. But as long as you're educated, then you can make, your own decision, your own calculation on, how much risk there is and how much risk you want to take. So, I think that there is a significant amount of, obviously, I wouldn't have you on the podcast if I didn't think there was a significant value in you and what you do.
Thank you.
And mortgage brokers, I mean, the good ones in general, because I think there is a difference, just like there is in any industry. Yeah. And obviously coming from a big bank. Yeah. how much more value, because you kind of just touched on it, but how much more value does that bring? And I just realized something. So Brent told a story on the podcast last week about a bank robbery where someone did not have the financing. And so
what?
Brent's client, yes.
Okay.
This is where we need the camera on Brent. Brent's client did not have financing for a property. So she did not get a pre-approval, which is so important. And I'm just thinking back now, I think it's, and we're not going to say what it is, but I'm 99% sure that it's the bank that you worked at. So,
Okay. So now,
anyways, full circle moment, but going back to that, from you working at a, so now let's get serious again, but you working at a big bank to going out and doing this on your own and having, and I think the biggest part is like, because when you were helping me and you had gotten passed off from who was dealing with me, you were a financial advisor, right? So you had 86 other things on your plate, not just mortgages. It's not what you did. It was it or no?
No, you're
yeah. So like, it's not your
totally right.
It's like if I wanted to get surgery, I would go to a knee surgeon, not like a general surgeon. So how much more extra value do you think that brings in knowing how to get ahead of the issues?
Yeah. So, prior to going into the business, I don't think I realized how much more value I could bring until I was actually immersed in it. Aladdin, a whole new world. Yeah, no, exactly. It literally just opened my eyes to a whole new world of opportunities.
I don't think you
and
could say it opened your eyes to what, sorry?
Like options.
To a whole
new world.
The worst part is I'm not familiar with Aladdin.
Oh, come on. It was one of the best Disney movies,
I hate
dude.
to let you down there.
That's okay. But it was, you know what? There are good banking officers, 100%. I saw it. I worked with an amazing team. But the reality is, yeah, we have 100 different other things that we have to worry about and work on. When you go to a mortgage broker, and I can say that on my side of things, I do feel like the expert because I can focus on one thing, the major aspect, which is getting lending for someone.
Yep.
The different nuances, the things that I've learned just from working with different, lenders, the opportunities are endless.
Knowing the ins and outs, right?
Knowing the ins and outs. And not every lender is going to be good for a client. And knowing that you have the option to bring them elsewhere, something that's going to be better for them. That for me was really important. Informed decision making, a huge thing for me.
Yeah.
I give my clients, the 2-3 best options, and it's like, this is B, this is C. Let's choose which one's best for you. I didn't have that option
before
at the bank.
Right.
I was also stuck to, or I was confined to the box.
Yeah.
Right.
You can't get creative. And I think that's important.
Creative.
So I think that's a ton of value. I appreciate you coming on today. And if somebody does want to get those options and get your expertise, what's the best way for them to get a hold of you?
Honestly, really active on social media. So if you don't have my number, social media, my
what's
Instagram.
The handle? Yeah.
My Instagram's, I think it's E. Delaney Mortgages. I changed it recently. So that's pretty much it.
When we inevitably cut the part where you're singing Aladdin and post that on Instagram, then we'll tag you.
Right.
All right.
Perfect. That's perfect. Right. The other way, you can call me, text me, my phone, just like you. It's my personal phone. It's my work phone. It's attached to my hip.
And we'll put your number below.
Cool.
Okay.
Sounds good.
Thanks so much for coming on.
Thank you for
you're a
having
perfect
me.
candidate for this. And as we wrap up every single episode, here we go.
Here we go.
There you go.